what's going on? Well, this looks like we're in full-blown crash, Chris, right? We've moved several standard deviations to the downside, well outside of the normal range. We have broken tons of key levels, and there's been no substantial bounce. There's like one bounce into the close that still couldn't break over that EMA cloud right here, and then it continued back to the downside. What on earth happened? Okay, I'm going to talk about this from the perspective of how I handled my trading today. Okay. And then we're going to do some reminders here though, because a lot of people are going to look at how they handled the day and they're going to say, "Oh, what I did was bad." But we need to make sure we don't do resulting, right? We don't want this day to fuck up our emotions and then cause us to spiral in the coming days, because it's going to be important to fight back those losses, okay? So the first thing that you have to be considering is that we got the interest rate decisions that came out in line. Economic projections came out, very minor changes month over month, okay? So you hear that, you see the market reaction. This reaction looks like an overreaction with all the available information we have, okay? Then the futures start pricing in the fact that there will be no future rate cuts. Market starts to sell off some more. Again, previous to past FOMC meetings we've had, it's still an environment where you could easily V-shape recovery out of this when Jerome Powell starts talking, if he brings in this dovish tone that we've been receiving as of late. Then we get Jerome Powell. That was the worst conference I've ever seen Jerome Powell have. The data he was citing, the responses he had, the dodginess of the questions, by far the worst appearance he's ever had. The market was not happy whatsoever with the outcome of that. It was fake data. He was saying that inflation is coming down to what they expect and that growth is just doing fine and within targets. And then he cited some labor market data that is completely counter to the data that we've been seeing. The market smelled the bullshit and it threw a tantrum, especially when he made a comment about, "Oh, we're not doing any long-term thinking right now." Oh, great. Yeah, you're flying by the seat of your pants. Wonderful. So today definitely could have been a lot worse, though. For weeks now, I've been telling Discord members the market feels really toppy. It feels very extended. It's very expensive. I've been selling out of my long term. I've been selling Tesla. I sold to Tesla at 450, and then it went up higher to like 488, and now it's at 430, so I'm feeling pretty good about that sell I had. I've never tried to tie tops to the long term. It's just trading the sentiment of things, right? Okay, it seems very overhyped. It ran way more than I expected in a way shorter time frame than I anticipated. So even though I want to hold it for the long term, it's too pricey in the short term, so I've been selling there. I did have a large position, though, and made an exception because of how amazing the setup looked like for Micron. I gave it an A rating setup. You know, for those unaware, usually when I give something an A rating setup, I even played this on the small account. I've been watching that series. I have an exceptionally high win rate for when I get these signals, with the daily and weekly both firing up in tandem with one another, and then the 1 hour giving the confirmation. And then Jerome Powell just, I don't even know if you could really call this a black swan event, but it is a large systemic risk event where the market thinks that the Fed is making a policy mistake and is trying to hard crash the market now. So we'll see if there's any reaction from this. I don't think the market has reached into full crash territory, so we might not. But we could easily get another day that's a full downside move like this. It's important to not overreact to anything too fast, or to go all inputs or something extreme. The one thing that kept me afloat reasonably today was I did have a very large VIX position that I shared with Discord members out in April because of my consideration that the market was already too overextended. And now those have printed up to 66%, closed a fourth here, a fourth here, a fourth here, and these are actually swings. So I still have, it was a very large position. I still have some of that up open. And so that really kept my account from taking a brutal beating Even though my position size, most things was on the smaller side, there was quite a few open. I had like 8 or 9 currently open, and then I had the larger MU position. We did take some like minor profits here when we were up like 30% or so, but then I actually kind of pushed back in on the dip here. And this morning we had great profits, but I didn't take those because I was expecting a volatility run up into earnings, which we usually see. So did I do the wrong thing? No, because 9 times out of 10, what I did today would have made me money. And it's hard to accept that. Sometimes you just get unlucky and there's not much you can do. And I know as someone who creates content, I'm going to take some hate for what I did. I'm going to take some hate for the losses we took. I don't think anyone was in a position where it could have blown themselves out, especially if they've been attending the classes and stuff and, kind of following my word on like, okay, we're going to play small. I even took a beating today because after we got the news come out on the interest rate decision, the economic decision, I actually thought, seems like an overreaction to me, and I expected that maybe Powell could be dovish and give us a V-shaped recovery, which we have seen multiple times in the past where the market overreacts to the data and then we get a bounce and the seasonal sentiment of, Santa rally takes over and sends the market back up. This time we got the opposite of that, not just the opposite of it, the extreme outcome. And I had actually been working on a special report post in the Discord and video where I was going to talk about how I thought the Doge project that Elon and Vivek are leading could actually lead to some downside because of how much government is playing a role in the GDP growth and how the private markets and commercial markets have actually been on a consistent downtrend and how there's been a lot of signs of weakness there with inflation staying high. And that's part of the reason why the market hated what Powell said so much, because it's like, you still want this 2% target, but growth is clearly coming down and inflation is sticky and hasn't budged. So this is the market's violent reaction to not buying anything that Powell was putting out. We can see it in the VIX. We can see it in DXY and the rally that we got that just kept going up and up and up. We can see it in the bond reaction that we got, which was probably why the market was so violent, because the bond reaction was so violent. So, yeah, I mean, a 2% target is probably unrealistic, and the Fed will likely give up on that, is my anticipation, because growth looks like it's going to break before inflation breaks. And so the Fed will probably become supportive. However, this is a stark reaction from the market, and it's giving me very 2021 vibes, where we have this environment where everyone's been trained to buy all dips. Then you get a massive dip like this one. People see it as a huge buying opportunity, and then it dips again. And they try again, and then it dips again. And they try to buy again, and then it dips again until everyone just gives up on trading. We survived that. But I still remember how brutal a start to a year that was for me. And so now is when I start kind of looking for only B or higher setups in the market. And I kind of swap to a short-term time frame immediately. Starting tomorrow, that's what I'm going to do. We've got to tighten things up. I've got to get back into a build mindset. And, we're sitting on a lot of cash in the long term. I'll be patient on making purchases, and I will buy dips. And that's what you got to do. We got to build back some of these losses, which I'm confident we will. I've survived much worse than this. I've been doing this for over a decade, guys. So we'll be fine. NBT will be fine. Today was definitely not a knockout punch, but it was a kidney shot, a gut check. I had been looking for a big sell-off, and I had talked about on live shows everywhere, posted in the Discord that I was looking for it to occur by the 13th. Well, 5 days off. There's one flaw I have as a trader. It is consistently like feeling in my gut that a rug pull is coming and nearly always being too early to it. So hard to time these. And after it didn't come, I started to think, well, I guess we're just going to have to wait for January. We're going to have to wait for maybe the inauguration. We're going to have to wait to see some of the Doge suggestions. And then the market might have a brutal reaction to that because of, any pullbacks or efficiency. Efficiency often means job cuts from what is playing a non-zero role in our GDP. Could cause a sell-off in the market, cause a brutal reaction. Instead, it was Powell. I did not expect Powell. He's done so good all year. Everyone believed, I guess we're going to get a soft landing. So we've broken all kinds of key levels, right? We can see that we've come right down here and we're looking at some pretty substantial levels here. We've kind of entered into a brand new chop zone. If you break below this 494, look out below. It's going to get into full crash territory. So if you get there within the next week or so, another brutal move like this to the downside, I think, it's kind of goes without saying, right? That's a full crash. And we might even see a breaker get hit. And it's reminding me of like 2018. We had a similar move like this where it played out in a few days and it actually did rebound because there are some industries that are still doing very well. And that's mainly focused within the AI areas. I noticed that if we look at the overall market performance today, NVIDIA was the strongest. It held up green for a while before it finally turned over. UNH, which I actually was kicking myself. I saw the big sell-off on UNH after the news that the government might look to break them up after one of their executives gets unalived, and it has had an incredible bounce since, and it was like health services in general was the only thing up today. But this is what massive blood looks like. Nowhere to hide. If you are even slightly bullish, you get slaughtered today. No escaping it. This happens. It's out of your control. We can't worry about things that are out of our control. We can reset, get back in the game tomorrow, tighten it up. Okay, B setups are better. Okay, that's all we're gonna play. We need good alignment. All right, we need catalyst, good alignment before we take the trade. Okay, we get that. We tighten it up. We'll make back the losses that we had today. Even if your losses are substantial today, this is the kind of day where people want to step away. But honestly, following a move like this, the next few days are going to be very profitable to trade. Okay, I'm going to tell you that right now. What follows this, whether it's a further continuation of the downside, whether it's a V-shaped recovery, when the volatility goes from 15 to almost 30 in a single day, you've got a very few profitable trading days coming your way. And actually on futures today, we were green. And that was even like with a long favorite on the long side. And I was kind of walking through members through the voice chat in the Discord. And so that'll also probably be really profitable. And so we'll be very active, but we'll be very selective when it comes to options though. Okay. So now that's kind of a recap of what happened, what my expectations are, maybe some short-term pullbacks. AI is not dead. It's not going anywhere, and it's only going to get better. Same with uranium and a lot of things in my long-term portfolio. I'm not too concerned about them. I did buy some Tesla puts because when I looked at the market, this is kind of where you want to short what you think is the most overvalued. Sorry, Tesla mega bulls that are going to hate me after they followed me after I made that video where I went all in on Tesla. I did take some profits at 450 and I bought some Tesla puts. Don't shoot me. Don't unsubscribe. Pretty please. I still like Tesla in the long term. I'm just trading it, protecting myself. Because I don't like to lose money. That money's mine. The market can't have it back. But that's, I hope you guys found this helpful. I hope it brought some clarity to how today went. And I hope it gives you more confidence about the future. Do not overreact to what happened today. Do not spiral in a negative way. Everything is going to be just fine. I promise you. Bad days happen. They happen to all of us. They happen to the best of us. Some things are out of your control. Some things just happen. And those are the things you can't dwell on, okay? Don't do resulting. Don't use a bad outcome to say you had a bad decision-making process, because what is going to lead to your success as a trader is having a good decision-making process. And sometimes you're just going to get unlucky. And if you take those unlucky moments and you say, oh, those were bad trades, your data set becomes corrupted. And then you are no longer in a process and a journey where you are ever improving, because you're using these data points as key points and lessons, when truly most of the time these type of events do not happen. And so 90%, probably 95, 98% of the time you would have made money. Okay. Hope you found this helpful. And as always, guys, God bless. I'll see you very soon.